Welcome to ShortView Trading. This is your morning market hit for Monday, 27th of April. What matters today and this week for traders? So whilst the S&P 500 is up overnight on the back of perhaps some of the news about lockdowns coming off in various states in the US, but also of course more out of the BOJ overnight. Despite that strength, the S&P has remained very much within its range of the last couple of weeks, really which it entered on the 9th of April. That range is 2700 to 2885, and of course we're quite near the top of that range at the moment. Similar comments can be made for Europe if you look at the DAX or the Euro stocks, range bound for the last couple of weeks. Equally in Asia it's similar as well, with the Chinese, Korean, Japanese and other key markets trending sideways. So the key question remains, are we range bound or are we rolling over? Or indeed, are we consolidating gains for the next move higher? Or is this market running out of steam? In our view, there are 5 key reasons why it's running out of steam and this relief rally is nearing its end. Firstly, near-term complacency is elevated. The VIX fell further on Friday, added to which there's little downside protection in portfolios. The put to call ratio is at low levels, a low level of downside protection. That means it's vulnerable to any negative news flow. Secondly, as you'll see in the chart now, volumes on Friday were very light in the S&P minis. Indeed, they've been light throughout this recent part of this relief rally, and those volumes on Friday were below even seasonal norms. Added to that, short-term models are rolling over, as we've been articulating. The technical scoring system's been rolling over from sell. Momentum's rolled over in this market, whilst risk appetite has also rolled over. And technically, of course, the S&P's been struggling at key resistance levels, its 50-day moving average, and around its 50 to 60% retracement of its losses on a Fibonacci ratio. And finally, and over and above that, importantly, stress continues to build in certain parts of the financial system. US uni spreads widened again last week. LATAM sovereign spreads widened again last week, and we saw sogginess in a number of other spreads in the market, whether they widened marginally or trended sideways. All of that shows there's stress continues to remain and indeed build a bit in certain parts of the global financial system. So this is a key week, and for those 5 reasons we think markets should be rolling over, not range bound. It often takes time and tests one's patience, but the stress is there, and it'll be interesting this week to see what happens with the tech earnings. It's a key week for S&P earnings. Most of the big tech stocks are reporting, including Facebook, Microsoft, Apple, Google and Amazon. Over and above that, there's 2 key central bank meetings this week. For full details on how we're playing this market, please see today's Daily Rag, available to subscribers and on the website. So what are we watching this week? Well, as I already alluded to, tech earnings are key, so the S&P first quarter earnings continue, with many of the big tech stocks reporting this week, and to which there's 2 key central bank meetings from the Fed and the ECB later on this week, Wednesday and Thursday. Both of those have press conferences after them, and over and above that we'll continue to watch all the factors we discussed, key economic data, including final PMI estimates on Friday from some of the world's largest economies, as well as a number of first quarter GDP estimates. So that's it from us. That's your morning market hit for Monday, April the 27th. Please do subscribe on YouTube, LinkedIn, Facebook and or Twitter. Simply search under ShortView Trading. Thank you for listening. Stay safe and trade well.